So the topic, Darren, you want to start it off?
Sure.
I will send out the link for it. Go ahead.
Well, so, we are members of AGLA, and not only are they, out there engaged in all the activities that are going on in real estate as it relates to taxes and tenant landlord situations, but they're also looking towards future legislation and things that might be coming down the pipe to, become part of the conversation about those items. And we came across an item that they sent out just last week that kind of brings up a topic that's been floating around for a long time, and approaches it in an interesting way. So we thought it was worth at least having a conversation about it, as I'm sure, it might not be 6 months until this really starts getting talked about, but I have a feeling the conversations will start coming up soon enough. And this particular piece of legislation is being labeled the Housing Affordability Act and Tax Cut of 2022. It's got two main tax-related components that both give a tax benefit to, I would say, average to above average owner-occupant property, but then adds an additional tax to anything above $4 million in value. And this is property tax. It has a third component that we're not going to go into too much, but it also talks about trying to make affordable housing more, streamline the process and make it more efficient to help get more affordable houses built. So as important as a component, but working out those details, I just haven't got my head around yet, or I don't think they've got their head around it, to be sincere. But all right, let's jump into. Are you gonna be able to pull it up there, Joe, by chance?
Yeah, I've got the Kaufman Legal Group
Okay.
document.
Sure, and this is the document that was filed just last month with the State Attorney General. Again, I don't know all the mechanics on how something becomes law, but I do know that this has been filed and requested to be reviewed and distributed. So I'll just go into it talks about the summary in the beginning talks about how we're in a housing crisis in California, and it gets into some details. It talks about some of the reasoning behind this. It's not enough housing located close to where people work, and the price of housing is extremely high for the average Californian. Too many workers endure multi-hour daily commutes,
Right.
increases air pollution, quality of time with family, higher levels of stress and health problems. I think all those things are legitimate. The question is always, does any new legislation move towards actually helping solve those problems?
Well, the thing that blew me away this morning when you mentioned this was since 1972, homeowners have only received a $7,000 property tax exemption.
Right. It's like a joke. I used to see $7,000 exemption. I'm like, what's the point? Basically,
Right.
that means a tax exemption is defined as what the portion of the bill where you don't pay property taxes on. So if you have $1 million property, technically you're only paying taxes on $993,000. You're getting $7,000 tax exemption where you are paying no property taxes. Right? And they cite in there, and this is completely legit. From 1972, the average price of a home was $28,660. Compared to today, they're citing the average price is $700,000. To me, that I wonder whether there should be some regional adjustments again, because
Yeah.
some prices are higher, some prices are lower.
Yep.
But here's the proposal. This is the main component of the first category here that we're talking about, is they're suggesting that $7,000 tax exemption be moved up to $200,000. That's legitimate. That would be
That makes an impact.
It's a true impact. That would be a $2,000 savings on property taxes annually. Um, so that would have an impact on everyone. And I do like about this bill, they also talk about putting into effect a rent relief. There's a tax credit for renters, and they're talking about increasing that tax credit to $200,000 for head of household or family of 2 adults, or $1,000 per individual, and that's also substantial. I mean, that's giving an equal break to a property owner as well as a renter. So that's legit. They talked about tying construction streamlining and procedures, and specifically for affordable housing for what they're calling middle and working class families. Again, that's what's so hard about any new legislation these days is the difference between, the impact it has on someone in the city compared to someone in a rural environment. The impact it has on somebody who's at where an average price is $1 million compared to where an average price is $300,000. There are components of the lending system right now that are backed by Fannie and Freddie, and they define areas as high cost areas. I don't know if that's, maybe I should know. I know LA is a high cost area, so I really haven't researched it too much further than that. But are there medium areas? Are there low areas? But at least there's 2 tiers minimum. I feel like there almost needs to be tiered systems with when there's such a difference in prices and the impact those things will have on individuals depending on where you live. The thing that we're not going to get into, and I'll touch on it for a moment, it's the last item of this document, is, how do you legitimately create affordable housing? It truly has to be a public-private venture, in my opinion. But what always gets me about the public-private venture is that the public is going to be seeking profits. It's just what it is, okay? And then everybody wants to label them as bad people because they're out there to make money. I'm not going to label them as bad people. I'll just leave it at that. But when the public gets involved, I'd like to see where the public can really bring some value. I would like to see government bring its negotiating power to the table to help create more affordable housing. But they tend not to. Even in the apartment sector, I talk about, well, why doesn't the city go out and help negotiate lower costs for trash and for utilities if you're having to restrict rent? Because then that could be directly passed through. Okay, you can't raise rent, but at the same time, we're going to give you a better rate on utilities because we're restricting your profit here, but we'll help you out here. The same thing has to happen when they talk about building affordable housing. The two entities need to come together because you can streamline all this stuff, but unless you put restrictions on price, the reality is the person who's building it is just going to increase their profit. That's all that's going to happen. I just really want to see people work together more to try to find common solutions. So we'll see if this leads to conversations of that nature. Let's see here. So it does define that in this document, they're suggesting that it be for an owner-occupied residence only. Okay, so otherwise it would just be the normal amount. Only owner-occupied residences would get this deduction. Then they go on to talk about the renters, as I mentioned, $2,000 per household, $1,000 per individual. I like this. This obviously is a component that should be built into every piece of legislation that has a fiscal component tied to it. And that is, it talks about adjusting based on inflation on an annual basis, up to shall not exceed 2%. Obviously the $7,000 that was established in 1972 has never adjusted for inflation. It was just a fixed number.
Yeah.
May have been the right number at that time. It certainly isn't the right number almost 50 years later. Unless you build that into the bill or the enacted adjustment, it won't take effect.
This all seems very practical,
Right.
like you said.
So,
I don't know how long. I don't know how $7,000 exemption lasted so long.
right. It's true. But as soon as they're talking about less tax, of course, now here's the part where they're talking about more tax to offset that. Right? It should have been inflationary when they first established this. I agree, Joe. So the more tax component is a new tax code that would basically create what they call a split roll on properties, meaning that depending on what situation you're in, your property tax will fall into different categories and be a different amount. It will not be a single amount for all properties in California. And that is this. So for covered properties with full cash value of $5 million or more, an annual surcharge imposed at an applied surcharge level equal to 1.2%. So those who own property, and they do not distinguish in this suggestion, distinguish between owner-occupant or non-owner-occupant or type of property. It's any property over $5 million will receive an additional 1.2% tax. So people with properties over $5 million will be paying 2.2%, the 1% standard plus the additional 1.2. And then they establish an adjusted range, reduced less than the 1.2% for between 4 to 5 million. So basically it says anything over 4 million will have an increased tax. It'll be a prorata between 4 and 5, and then once you hit 5, it's that additional 1.2 for anything above that amount. They also point out, which I thought was interesting, because there are a lot of, particularly on a commercial leases, there are a lot of triple net leases out there, which means the tenant pays for everything. Tenant pays for tax increases, insurance increases, whatever. They do point out no person responsible for paying the surcharge for covered properties shall directly pass on the cost of the surcharge to any tenant. So they prevent the owner from passing that surcharge on to the tenant, which would be the case automatically in a triple net lease unless it defined it differently.
Okay. So some unhappy people, it sounds like.
Oh, sure. Yeah.
On the higher side.
A substantial tax on the wealthy. But there's,
Yeah.
and look, I understand the argument of, the whole purpose of Prop 13, or at least as it was marketed, I'm sure there were some people in the background that had different intentions, was to, prevent grandma from getting kicked out of her house because she can't afford to pay the taxes anymore. Because she's on a fixed income, and variations of that. But it wasn't meant to give business more profit. And that's what this is saying. If you're making if you make a certain amount of income, or if you own a property that has certain value, then you should pay more taxes on it. The state should get their taxes due to them. But I would be surprised if this was to go forward, that if they wouldn't make an exception even for a higher priced single family. Look, grandma could have bought her house in 1972 for $500,000 and it could be worth $5 million now, and she still might be on a fixed income. So the same thing could apply in that scenario. And it does point out that it's basically all property: commercial, residential, industrial, mixed use, and even land. The only exceptions it makes are for...
There's some.
Yeah, there are. There
Low-income housing.
Low-income housing, agricultural property. Things that are restricted by deed to lower income occupants.
Vacant land. Was that it too?
Vacant land as protected for open space only.
Open space.
Right. And some recreational and educational use as well. So that's it. The other portion of the document talks about how to try to get more affordable housing to market in an expedited way. It doesn't go in too much to how to do it in a more affordable way. And again, there has to be an affordability in building the cost of construction to get it to market, and how is it going to be maintained at a lower price. Public housing in our country does not have a strong history, and I don't know what it's like in other countries. Maybe it's done successfully, and that could be an option if there are examples we could follow. But I know in this country we have not had a very successful public housing project, and this is a variation of that, and it's going to be a public-private venture in some way, because nobody's talking about going back to a true public housing situation. So there you go.
Okay. Well, I guess we'll find out later, right? If this happens or not. It's an issue.
Yeah, like I said, I think the conversations about this will start flowing. It'll be interesting to see where it goes.